Yeah, a good 80% of my stock market portfolio is in the US. That originally when I started getting investing into the stock market, a lot of my influences were in the US. Probably my first ever most successful investment I made was Tesla in 2018. I think the biggest thing is transparency. You know, fair enough, you got something right, celebrate it. But for me, the biggest thing that frustrates me is when things go wrong. And there's nothing wrong with getting things wrong as long as you learn from them.
Welcome everyone. I'm chatting with Jacob from JKR Investing YouTube channel. Jacob, thanks for joining me.
Thank you for having me.
Yeah, you're from UK. I love your accent. So you're from UK, but you invest in stocks, and it always fascinates me that people from around the world, we can come from all around the world, and we have this common purpose, common goal to make money through the stock market. But you invest in the U.S., right? A lot. I
would say, yeah, a good 80% of my stock market portfolio is in the US.
But why do people why not invest in Europe? Don't you have exchanges in UK? Like, why is it that people gravitate for the US stocks?
Yeah, it's a good question actually. I think, to be honest with you, mine's probably more of an individual case. Is that originally when I started getting investing into the stock market, a lot of my influences were in the US. So naturally, because they were kind of talking about the US market, my mind naturally switched to the US market of going, oh, they're talking about this, let me have a look at this. And a lot of them were US listed companies. Last few years, I have gone a bit more into the UK market. I kind of realised, why don't I use that home advantage a little bit more? Like, I know these companies quite well because I use them a bit more. So use that advantage a bit more. So
but you have like AIM, right? The exchange.
Yeah. Some people like it, some people don't like it.
Yeah.
Well, there's a bit of controversy around it at the moment because there's a lot of talk. I don't know if you've seen it, but there's quite a few UK companies avoiding listing on it because it is now seen as a bit of a not as good market to be listing on, with liquidity, maybe companies not getting the correct evaluation, whereas quite often what a lot of us UK guys you'll see is quite often reference, well, if this was a US listed company, you'd be getting X more value if it was a US listed company. And right now, one of the issues that we do have in the UK is that we are seeing so many of our companies moving to the US listing and just missing the UK listing. And if not, because a lot of them are quite incredibly cheap at the moment, a lot of them are actually getting taken out by a lot of US companies at the moment.
Well, I'm saying that because, you see, I focus on small microcap stocks, and I actually wrote a book before called A Microcap Investor, where I talked about the secondary exchanges, which in the US we have on the Canadian side, Canadian Securities Exchange, Toronto Stock Exchange Venture, and that's when I discovered the AIM in England. That is, the secondary exchange, which is, by the general media, financial media is viewed negatively because a lot of garbage companies trade on these secondary exchanges, and they go to zero, and that's where you find the promotional companies that have nothing, they just pump and dump. But within maybe I would say maybe 1% of those companies are interesting, because if you get them and they eventually grow into a company that can list on a reputable exchange, then they get re-rated. So that's how I became aware of the AIM.
Yes, yeah.
And I don't even know if I'm saying it correctly. Is it AIM or?
Yeah, AIM. Yeah, it's
okay.
That's the thing. It kind of has that reputation as the Wild West. Sometimes, like, there's a lot of companies that come on, and quite often it's just a liquid grab. Like, oh, we might have something, so come invest in us. And quite often, quite a few people get attractive, it goes wrong, and go, well, I'm not doing that again. But like you said, every so often you do kind of get that one gem that can turn out to be quite successful. So it is tricky sometimes trying to work out which are actually the businesses that can be that successful one. And if you can pick them, you can have good success in it. But like you were saying there, there's the Wild West sometimes, that there can be sometimes a few things that can not go so well.
Yeah. So what define your investing style? What do you look for? Who were you inspired by to develop your investment strategy?
You know what? I wouldn't actually say I have like one particular style that I go for. I do like growth stocks. I like value stocks. I like dividends. I can have a mixture of them. I would say I do tend to go a little bit more towards the growthy end, just because I feel like I'm a younger investor. I can take that risk, and at the end of the day, if that was to go wrong, I have time to make up for that, hopefully with another investment. But if the right value stock comes along, if the right dividend stock comes along, I won't ignore it.
Okay. And what are some of the examples of stocks that you like, or maybe that you succeeded with in the past?
I would say that normally when I'm going for the growth stocks, I tend to be more in the US markets, because you do have those better growth stocks listed in the US markets. Not always. There's some good stocks in the UK markets that are growth stocks. Half the time they end up getting taken over on the UK markets compared to the US markets. So I was probably my first ever most successful investment that I made was Tesla in 2018. Bought Tesla in 2018. One of my more recent successful ones was Hims and Hers. I started buying that one in about 2022. That's gone on to be a 10-15 bagger since then. That's done very well. And then I'd say more dividend side, value side goes more to the UK markets. The yields in the UK markets tend to be a lot more attractive than some of the US stocks in particular. So yeah, I'd say that the UK is more the value and dividend stocks that I do tend to go for.
So I take it as they have higher yield because they don't get the respect that they should in terms of valuations, right? Because 100%. Of the liquidity and access to capital.
Yeah, and just the negative sentiment around the UK in general at the moment. I think a lot of share prices are quite compressed, and obviously when the compression happens, the yields tend to go up.
Now, do you have situations or opportunities where investors or you yourself would buy a company in UK with the idea that they will change the exchange and list in the US, and then hope for the re-rate?
Yeah, you know what? There has been a few times where you see businesses in the UK say, look, we do have the intention of moving to the US, and the assumption is that if they were to move to the US, they would have that kind of metric expansion where they are valued a lot more on the US markets. Probably two that come into mind at the moment is I have a company that's quite a small company in the UK, which is a bit more of a growthy stock, which is called Audio Boom. They've publicly come out and said, look, when I think we get to a 200 million market cap, we will go on to the US markets then, and they've got most of their revenue coming from the US markets. So they're quite openly saying we'll go to the US markets, and their opinion is that when they do move there, they will get that bigger valuation. And then I'd say there's probably another company that I have, which is a smaller UK company as well, which is more of a growth stock as well, which is called Gaming Realms. They are getting a lot of their exposure from the US because they're in the kind of iGaming boom that's going on in the US at the moment. They're about I think 18 million market cap, maybe just going off my head here, 18 million market cap, and my opinion would be eventually that either a bigger stock in the US will take them out, or they will switch to the US markets at some point.
And do you see situations where companies choose to list in UK because maybe it's cheaper? Is this even true?
Potentially, but overall the slumping in the IPOs in the UK, I think we've just hit a record low this year. There's not many companies at the moment looking to list in the UK because there is the kind of just overall assumption at the moment that many companies just don't get the right valuation here. So it's not really attracting anyone in at the moment.
Well, I find it fascinating because I listen to some influencers, some YouTubers. They find some US stocks too expensive, so they'll go to like Europe, Japan, or somewhere else, looking for those lower multiples. But I think that they're missing the point. Is like, unless this company is willing to move, like it's gonna keep having those low multiples.
Yeah, I mean, I don't know if there'll be a time where we will see a great shift where we see other countries trade at a richer premium. I don't know what event would be that situation where we do have that, where the UK all of a sudden becomes a bit more of a premium market and it's valued at more on a US basis, for example. I think a few investors had the wake-up call a few months ago when we did see the US compress a little bit with the tariff situation, and could that be the time where the US does trade at a lower situation? But we've kind of rebounded back to where we were, so that was the only time where there was a flicker of, will the US come lower, and people go, okay, maybe we do need international exposure. But that very quickly seemed to come to an end, and maybe there is a one time where other markets are valued at more of a higher on a US level, but I don't know what event would be where that would happen.
And so let's switch around a little bit. Let's talk about YouTube. What made you want to make videos? How long have you been a YouTuber? Just talk to us about that.
Yeah, so I started investing, I think, around about 8 years ago. At the time, there wasn't really much. YouTube was nowhere like how it is today, where there's a lot of content creators on YouTube. You search in a stock, you get, I don't know, you type in Tesla stock, you're getting hundreds, thousands probably of YouTube videos now on Tesla stock. Back when 8 years ago, which sounds crazy, you wasn't really that many videos out there, especially from UK point of view. There was certainly, I wouldn't say there was any UK stock market content creators on YouTube 8 years ago. So I started my investing journey, and I didn't have the best knowledge, obviously, when you start. You're new to the game. And I thought, you know what, I'm doing this research into some of these businesses, and I'm putting quite a few hours research into some of these companies here. I'm just going to record what I've done, my notes on them, and if anybody comes on, watches the video, finds it helpful, it might help them looking into a company that I've just looked at, and my notes might help them when they're investing. So I did that for quite a few years, and then eventually, as the years went on, the views just kind of ticked up a little bit more.
What are some of the drawbacks of being on YouTube in the finance space?
I would say the biggest drawback, and especially this, I would say when the 2022 stock market crash happened, that was quite tough, because you were having to come on and talk about stocks every day, but it was like a pure year, maybe year and a half, where stocks were going down, and you could see a few people getting a bit fed up when the markets were going down, saying, oh, this stock's down, and then this one's down again today, it's down, it's been going down for 6 months, 12 months. And there's certainly an element that if you have been talking about a certain stock and it has gone into a downtrend,
it's your fault.
It's your fault. Funny enough, though, when the stock is going up, it's their idea.
Their idea. I know.
It's their idea when it's gone up, but when it's gone down, it was your fault. And sometimes, you kind of come the scapegoat of you were talking about it, so you take the blame. And that, certainly in 2022, that was a common situation. That was the one that kind of opened up my eyes.
Yeah, and I know you've been vocal and critical about some larger finance influencers, and you get a bit frustrated. It shows in your voice. So talk to us about it. Why are you frustrated with some of these influencers? What is it that you're seeing that is not cool?
I think the biggest thing is transparency. I'm a big guy for just being transparent, and if you get something right, fair enough, you got something right, celebrate it. But for me, the biggest thing that frustrates me is when things go wrong and very quickly it's hidden, not talked about. And I think certainly there's a few people, especially some of the bigger guys, that have got into a situation where sometimes things can go wrong and very quickly it's well, we're not going to talk about that one again, or sometimes it's quietly removed from a portfolio, and it's well, if you make a mistake, one of the big things about this game is that when you learn is because you've got things wrong, and there's nothing wrong with getting things wrong as long as you learn from them and if you improve them. As we know as investors, there's no investors, the best investors in the world, the Warren Buffetts, they never get 10 out of 10 right. So if you get one wrong, just own it. say, I got this wrong. The reason why it went wrong is so this, and this. And if you're honest about it, you're transparent about it, and you say, look, bad mistake, we move on. But I don't like it when people are deceiving people and trying to act like, oh, best thing ever, got this one right. And it's like, well, what about this one that you just sold out in the background? You don't talk about it. You hope people don't notice it. And there's a lot of things like that going on that, sometimes you notice, like buying companies and then they sell them out and then they buy it back in at lower averages to make it look like they got a better average. And there's a few of them kind of tactics that go on that I'm not a big fan of.
And talking about the averages, I listened once to an interview, I don't know who it was with, but the guy was talking about that if his analysts are 55% right, they're at the top of their game. I mean, that's just the reality. We can't have them, we can't get it all right, but the hope is that the ones that we do get it right, that they, cover up the mistakes and the sins of the ones that we get wrong.
Yeah, 100%. I think it's Peter Lynch that's was a big, on One Up on Wall Street. The book that he wrote. He was saying like you're never going to get 10 out of 10. You're never going to get 9 out of 10. If you get 6 out of 10, you're a pretty good investor, and if you get 7 out of 10, you're probably one of the better investors of all time if you're able to get 7 out of 10 right. And if you make a mistake, own it. Yeah.
Okay, so now for the next 3 to 5 years, what stock or couple stocks do you like that have potential to appreciate over the next few years?
Yeah, I mean, if you're asking like right now at current prices, it's a bit more of a tricky one because, in my opinion, the markets are a little bit of a richer value on the US side. My current largest holdings, Hims and Hers, but I'm buying that at $3, $4, $5, and obviously that's 40 something right now. So I don't know if I'd be buying it right now. That is one of my larger holdings with DraftKings, SoFi, Mercado Libre. But the problem I have is I won't be a buyer of them at these sort of levels. So them kind of stocks are not ones that I'd probably be buying right now. The ones I'm looking at are probably stocks that maybe have some issues, so you'd keep them as smaller positions, and that's why they're kind of compressed on the share price at the moment, even though we've been on a bit of a more bullish market. In the US, I would say that the ones that are probably interested me are the likes of New Holdings. That's a company that is in the banking space in Latin America, and there's a big boom at the moment with online banking, online purchasing. That's not too bad. I think it's like a 24 times earnings for a company that's growing plus 20% a year. In the UK, I've been buying more kind of dividend stocks with the likes of B&M. That's a UK retailer, pays around about a 6% dividend yield. They've had a tough time at the moment where they've been struggling to ramp up profit and like-for-like sales. So they're having a bit of an issue at the moment. So those kind of two that I've been buying from a US and a UK point of view.
Okay. And my final question is, do you have any final thoughts that you'd like to share with my listeners? And if they want to learn more from you, where can they find you on social media?
Yeah, so most of my content is on YouTube under JKR Investing. And I tend to post probably 5 videos in a week, one video Monday to Friday. And most of my stocks are based on long-term investing, holding for 2 to 5 years, and normally I try and aim for 100% return when I'm picking these stocks. And like we talked about a little bit earlier, variety of stocks, some big market caps, hundreds of billions, sometimes 80, 90, 100 million market caps, and a variety of dividend value and growth stocks.
All right. Well, that was great. Thank you for doing this.
Thank you for having me.